welcome to the 6th of 8 webinars in a series covering each of the levers in our equity growth wheel. My name is Pat Webb. I'm a Client Growth Director with Equiteq, and I'll be speaking with my colleague Paul Beaumont. Let me give you just a very brief introduction to Equiteq. We are the leading M&A firm focused exclusively on the consulting sector. For owners with immediate plans to sell, we help them realize their equity value by selling their business. And for owners who are not yet ready to sell, we help them grow their value ahead of a desired transaction. In this webinar, I'll be asking Paul to give you some insights into sales and marketing. And if you have any questions, just post them using the control panel on the right side of the screen. So, Paul, what's the key message from the sales and marketing lever?
Yes, hello Pat, and hello everyone. The message from this lever is simply to build a sales engine to drive growth. There are 3 important points I'd like to emphasize. Firstly, any business that does not invest in sales and marketing is less likely to scale to a sellable size with enough equity for the owners. Secondly, for a potential buyer of your firm to place a value on your forecast, you have to be able to demonstrate that you have a reliable process for revenue growth which you control. And thirdly, one of the most damaging deal breakers in a sale process is revenue dropping off during due diligence, and firms without a sales engine are always at risk of this happening.
Okay, so let's put that message in context. This picture shows the Equiteq 8 levers of equity value, which represents the key elements that a potential buyer will use to determine the level of risk with acquiring your firm. So Paul, can you give us our first look at the sales and marketing lever?
Well, to build and run a sales engine, you have to embed 3 elements into the business. You have to analyze the market so you know where to focus. You have to start here so that you don't waste your time and money contacting people who won't do business with you or generating interest in people you don't want to do business with. Secondly, you have to make sure you have a well-defined sales and marketing process, because this stuff is too important to leave to happenstance. If you don't have a process, it won't get done. And thirdly, make accountability crystal clear and support the process with good management and simple metrics, otherwise it won't work. And for the rest of the webinar, we'll look at each of these elements in more detail. The first element is to analyze the market so you know where to focus. And here's a couple of tools to help you. The top one shows the service market matrix. This is a simplified version of one we showed in the quality of fees webinar. It shows the revenue a firm has earned from each of its 4 service lines spread across the 5 markets in which it operates. You can see that the pharmaceutical sector dominates, with financial services second, and that their service number 4 is where they earn most revenue. In the table at the bottom, a number of factors have been chosen to help clarify where they should focus their marketing spend. Each of the factors is ranked against a market score of using a 5, 3 and 1 scale. The first one, right to win or proven track record, reflects where they've done business and how strong their proposition is in each market. The second factor is strength of competition. To judge this, you'll need to know about your competition, how you shape up against them in each of the markets. Next, you need to know how large the market is. Knowing this is fundamental to the business and should be quantified as far as possible. You can get this data from industry associations, government SIC codes, LinkedIn, and so on. Well, and there are other factors, and you'll have to identify them for your firm, but I'm sure you get the idea. The quantification gives a basis for discussion. In the example, it looks like pharmaceutical and financial services markets should take the majority of the marketing budget, which is no surprise given where the revenue comes from. It also suggests that running a campaign in, say, manufacturing would not be a good idea, because the competition is very strong in that sector and there's little opportunity for the business to sell its full range of services there. As a rule of thumb, the firm should be thinking about spending 10% of its revenue on sales and marketing. So you have to be very focused and get the maximum return possible from it. Being focused, as we've said many times in this series, is very important for growth, and potential buyers of consultancies love it too.
Okay, so once you've decided which markets to focus on, how do you target the prospective clients that you want to reach?
Yeah, good question. Well, you need to do a bit more thinking here to decide who you want on your client list. And here's a simple way of informing that decision. As the first step, try to identify the characteristics of your ideal client. We've talked already about which sectors they'll be in, but there will be other features such as geography, size, the level of contacts you can get to, and the needs they have. Secondly, translate those characteristics into criteria that you can score. The example shown is for geography, where the firm is most interested in US-based clients. We haven't shown a full worked example, but it's easy to see how you could do this. The third step is to score potential and existing clients against the criteria, and this will validate the method and, as a byproduct, help you review the desirability of your existing client portfolio. The scoring of potential clients enables you to create a prioritized list of target clients to go after.
So once you have that list, you need a process for going after them. What does that look like?
Yes, well, obviously as a consultancy you'll want a process, otherwise it'll either not get done at all or it'll be chaotic. Now here's a simple diagram of the overall process. You can see on the left the three functions of marketing, selling and delivering. The aim of marketing is to generate leads for the business. Its field of play is primarily amongst the population of potential clients who are either unaware of you or those who have an awareness but with whom you're currently not commercially engaged. The tools at marketing's disposal to attract prospects include running campaigns, maintaining a great website, advertising, organizing network events, and so on, all with the intention of getting more and more sales meetings for the business. The job of sales then is to run those sales meetings and nurture the relationship with the potential client until a proposal is accepted and they convert the prospect into a real client. And the sale function manages the pipeline and ensures the contracts are in place to deliver the work at the right margins. Delivery is the next step and is the easiest of all because that's just doing what you know and do best, namely solving client problems and providing great benefit. Okay, so maybe it's not always that easy, but the process and the marketing effort doesn't end there. The default should be that every engagement produces a case study or a paper that you can use back in the marketing process. In addition, when you develop new methodologies in your client work, that is, you create new IP, you can use them to upgrade your value proposition, which in turn informs your marketing. You may also get data from your client work which you could use in a benchmarking context and again create articles and blogs. In other words, yet more IP that marketing can use to generate more interest and more leads. The picture on the slide describes a virtuous circle rather than a linear process.
Mm-hmm. So Paul, can you give us a little more insight into how marketing should be getting the message out there?
Yes, you need to have a multi-tiered approach. In the first instance, this means you have to engage in both inbound and outbound marketing. Inbound marketing encompasses all those activities you undertake to attract people towards you. You'll need a clear, effective website that delivers real value to your prospective clients, as they will check out your site early in the process to satisfy themselves that you are the best people to help them. Now, people don't stay long on websites. If they can't find what they're looking for in 15 seconds, they're gone. Therefore, make it easy. Don't have too much text, especially on the home page. Make sure the site talks about benefits. The language needs to be client-centric, not you-centric. It should demonstrate rather than assert your expertise through compelling case studies, articles, blogs, and so on. Your services and the markets you serve should be unambiguous and easily understood from the website. Navigation through the site, search engine optimization and page layouts are all the domain expertise of website designers, and we would strongly recommend that you use their services to get this right. And you'll need to use metrics about how your website is being used to inform changes in content and layout. Now, part of the marketing plan needs to include which elements of social media to use, and that's informed by your target market and how they use it. If they have a large presence on LinkedIn, say, you need to be there too. Getting practitioners to speak at conferences can be very effective because the audience will recognize your expertise without feeling they are being sold to. Obviously, you need to choose only those conferences that will be swarming with prospective clients. And publications is another way of demonstrating your expertise, but again, it's only really valuable if the publications are read by your target prospects. So no vanity publishing, please. Now let's talk about outbound marketing. It's much more targeted than inbound marketing and includes, for example, targeted email campaigns, which can be a very effective tool. You can write a series of 3 short, interesting emails to target prospects. Include a link to a downloadable article, for instance, which will provide value for them and give you the ability to know whether or not they've clicked through to the link. For those who do, you can follow up with personal phone calls. The substance of the emails must be relevant to the target group. Before you send the mails, check, is it interesting? Is it relevant? And does it encourage people to take action? The language, as always, is important. And remember the mantra, talk about benefits rather than technical expertise. We've included an example of this on the screen. Now, another excellent outbound marketing tool is to develop client user groups and forums, giving you the opportunity to continually add value to both current and past clients. We should also say something about how to build a brand in a consultancy. This is something that is getting increasing attention from senior management teams, but is not particularly well understood outside of the specialism of marketing itself. Certainly, building a brand is much more than just refreshing the logo. If we were to recommend the 3 things a growing consultancy should do with regard to branding, it would be to, firstly, develop a vision that states clearly where you want your firm to be in 3 to 5 years' time, what type of firm you want it to be, what type of employer, what type of clients you want to attract, in what geographies, and how you want to be perceived, etc. Secondly, identify what it is that makes your business different. We reviewed this at length in the webinar on the market proposition, and it is worth repeating here. Your brand must encapsulate what it is that makes you stand out from your competitors, why clients should buy from you, and what are your unique ways of working, and so on. And thirdly, ensure consistency in every interaction with your clients, the website, white papers, newsletters, and so on. But you need to be consistent with your staff as well, and your suppliers. And this is not just about the tangibles of the logo design, it includes behaviors and values, as well as a consistent commitment to your vision and strategy. And rebranding a business can be a lot of work, and it's probably one of the areas where you need to buy in some specialist help so that it doesn't consume too much of your time, and so that you can use external expertise to get it right. Now, the third element in this lever is to make accountability crystal clear and get the whole team selling. Let's be honest, selling can be difficult, so you need all the help you can get, and you can maximize the effectiveness of the team if everyone understands what they have to sell and to whom. You'll need to cascade the sales targets down through the organization. That means, of course, that you'll have to set sales targets in the first place, and the best way to do this is to be clear about the growth you have to achieve, especially if you have a goal in mind for selling the business. And where you cascade the targets depends on how you've structured the business. The example shown here shows a layer of business units which may be centered on market sectors, each responsible for a number of clients. The head of sales is accountable for the overall revenue target. The business unit heads are accountable for their individual business unit contributions, and for the key strategic accounts, the account managers will be responsible for delivering the appropriate revenue from their clients. Once the targets have been agreed, it's up to the team to work together to achieve success. Now, as in any team, people have different roles. The graph at the bottom of the slide shows how time might be spent by 3 different types of players in the team: the finders, minders, and grinders. Apologies if you don't like the terms, but they are quite descriptive of the roles. The finders are your top salespeople. They are the ones who get you into new clients, and to be successful at this, they need to be spending about 70% of their time selling. The minders are your key account managers. most of their time they're delivering, but they will need to spend up to 20% of their time developing new opportunities within the clients. And the grinders are the more junior fee-earning staff who spend lots of time on delivery, but who also have a responsibility for identifying new opportunities within the clients and bringing them back to the account team to develop. Not everybody is a natural-born salesperson, but as you can see, all fee earners should have some responsibility for selling. So train them. Don't rely on just reading a couple of books or on picking it up as you go along. It's far too important for that. And training your team in selling techniques could be one of the best investments you'll ever make.
This is a very interesting point, isn't it, Paul, about developing your internal sales capability. What about those who say, well, isn't it better to recruit proven rainmakers to generate the big sales rather than relying on homegrown staff?
Yes, I think you can successfully add to your sales capability by recruiting, but you have to be very careful about bringing in people at the very top of the sales function, especially if they've come from a much larger consultancy. And being able to sell large pieces of work with a famous consulting brand behind you is a very different proposition to selling a brand hardly anyone has ever heard of. I have seen more failures than successes when people have recruited heavy hitters like this. And generally, I'd say you're better off bringing people in at the minder level and building them up to be better salesmen from there. Lastly, you need to make sure you manage this whole process professionally. Measure your discounted sales pipeline all the time. This is a key component of your sales engine dashboard, so don't take your eyes off it. Incidentally, a potential buyer of your firm will want to see this too, and to know how good you've been at forecasting future revenue. It should go without saying that you need to hold regular sales meetings that just do the basics right to make sure actions are followed up and prospects converted. Lots of consultancies are really bad at this and often only have ineffective sales discussions where people are not held properly accountable, where no support is given when needed, and where opportunities simply drift away. So don't let your sales engine stall through neglect. One of the important metrics you'll need to have in place to support your marketing activities concerns the success of your campaigns in turning contacts into engagements, as exemplified by the second chart on the page. Now, fortunately, CRM systems make this type of analysis a little more straightforward, and you'll need a system once you get over $1 million or so in revenue.
Great, thank you, Paul. I'd now like to move on to some of the questions, if that's okay. And we've had quite a lot come in ahead of time, as well as some being posted now. So I'm going to start with this one. How do you focus the sales effort of a small team of partners in a market that's expected to see very rapid growth in consulting demand, but where clients are not yet familiar with international rates and fees?
Yes, well, we've spent quite a lot of time in this webinar talking about focus, which I hope answers the first part of that question. And the secret to being able to charge high rates, which is what I assume the question means by international rates, lies in the quality of your unique value proposition. The more differentiated you are, the more value you can demonstrably add, the more benefits you can deliver, well then the higher can be the fees that you charge. If your clients are getting great benefits, then they'll see a return on investment which will justify the fees. So get yourself a great unique value proposition.
Okay, this one's on a slightly different tack, Paul. As our firm grows, when do we need to have our own marketing department?
That's a good question. Well, the marketing support requirements increase as the firm grows, obviously. And initially, when you first start off, marketing is generally done by the founders with perhaps some ad hoc external support. And over time, you'll need to invest in a part-time chief marketing officer until by the time you're around, say, $5 to $7 million, you're likely to need a full-time CMO and a small support staff.
Okay. This next one, our sales have stalled. How should we reinvigorate them sustainably? Paul, let me take a crack at this one.
Sure.
The thing that came up for me, because I had a moment to see it on the screen before asking you, Paul, I think there's a piece of diagnostics needed first. Where's the problem here? Is it that the sales engine stalled? Is it what you're selling isn't getting traction? Or is the market diminishing? Or what's going on here? So I think there needs to be a little bit of a diagnostic here. That idea of sales stalling is very common in smaller firms with the feast and famine syndrome. So that's part of making sure that there's time associated in people's diaries, particularly at the top of the firm, as you were mentioning, Paul, to make sure that that happens. So quick summary of what to do to reinvigorate sustainably. Pivoting off your comment, Paul, about getting your great unique value proposition. This is something that people often don't spend enough time on. You have to answer the key question, why should I buy from you? So that's the first step in the process. Then analyzing the market so that you can know where to focus. That was your first point, Paul. To this questioner, I'd say, depending on the size of your firm, you could be very specific about this. Maybe just one market and one sector so that you're pouring your resources into one place. Remember, for every dollar or pound of revenue that comes in the door, 10 cents, 10% of your revenue needs to go into a jam jar for marketing. So obviously the more specific you are, the greater the impact you can have. So maybe you just want to look at a very small segment of the market and your services. Then making sure you have a well-defined process and the accountability clear. And if you're a smaller firm, really that comes down to making sure there's enough time in your diary to focus on this. That pretty much covered,
Right.
Paul?
I couldn't have said it better myself, Pat.
Oh, good. I've been listening. This one is a different tack. What specific aspects of marketing would a potential buyer of my firm look at?
Well, we've said many times that a buyer is trying to determine the level of risk associated with buying your firm. So they're very interested in steady, profitable financial growth. And to accomplish that, you need to grow your existing client base and attract new clients. So evidence of how well you manage this ties directly to the elements of marketing that we've touched on today. In terms of metrics, you could expect interest in whether your discounted pipeline is on track, the accuracy of your forecast, how much you're spending on marketing, and what your conversion rate is. I think those are the sorts of marketing factors which inform the level of risk and are therefore the things a buyer would want to understand.
Time for one more that's just come up. This one is about creating a sales and marketing engine in a smaller firm. And again, if you're okay with this, Paul, I'm going to take a crack at this one.
Sure.
Again, you've got 10 cents from every dollar in your marketing jam jar. You have to make a choice about inbound and outbound. Now, inbound, as Paul was describing, is really about dragging a net through the ocean, bringing people in towards you. That I would say leave for later. But websites and website design, that can suck up a whole amount of resource. And the quality of the inbound leads that you're getting may not well justify that. So I would say focus on your outbound marketing first. That's about when you go out to individual, targeted, specific people that you want to become clients with very specific targeted messages. And one very effective way I've seen this done, encouraging clients to find out some new insight in the market. Again, very focused, very specific. Look through your previous client list and then go back through. Maybe you haven't worked with these people for 5 years. Go back out to them. Hey, we're still around. Very interesting new things happening in the market. Would love to set up a 10 or 15-minute conversation with you. And that opportunity to create expanding conversations with your existing base allows you to look for opportunities in a way that's low-key for you and adds value to clients. Just one other thought on this about getting some more help around this. You mentioned, Paul, about when should you invest in your own marketing department. For smaller firms, this is likely to be ad hoc support, as you said. Capability Jane in the UK and MomCorp in North America are places to look for highly qualified marketers that you can bring in to just help you on specific campaigns. So Paul, we're running towards the half hour. Do you have any recommendations on what to do to improve sales and marketing strategies starting right away?
Sure. Well, very simply, the sales and marketing homework, you can try these. Start deciding where to focus your sales and marketing activity. Stop being vague about sales targets and continue farming your key accounts and hunting for new ones.
Okay. So if you'll forgive me at the end here, our job is to help owners like you grow revenue, profits and value so that you can get to your exit destination more quickly and more smartly. So why not drop us an email, set up a 20-minute chat when we can offer you some specific advice on your firm and how we might do that for you. Meanwhile, I'd like to thank everyone for attending. Next week we'll be talking about the 7th lever, which is consultant loyalty. So please do check out our website for all of our webinars and to register for that. Thanks again for listening, and goodbye for now.